What is going on, everybody, and welcome to another technical video for the upcoming week. If you do enjoy technicals, I have started to put out a new weekly series where I'll essentially separate my technicals from my overall market thesis. As I do believe technicals do play well. This is why I do play supply and demand all the time. But aside from that, I don't really use technicals too much. It's just kind of my buy sell zones. And then I actually go deeper into the 1 hour when I do any kind of intraday trading. But majority of the time, if I'm trying to do any kind of swing trading, I use the higher time frames to do so. And again, I'll go over some of the stocks that I'm looking at throughout the week. And if you stay to the end of this one, I am going to rechart some of Tesla, show you how I kind of do that, so that way you guys can get a better breakdown of how to set up your own zones for the own stocks that you're looking at. And then we can kind of go from there. So to get started, SPX, of course, we've hit all-time highs again with this current hope that we do get a cut. So as you can see, we did break out from the previous high, roughly sitting around the 52.53 here. Had that bit of a scare there as the market started to see a lot of inflation. So the fact that they're manipulating reports has allowed it to come back up to all-time highs. We'll see what happens in here. So we are in price discovery mode. So with this, it's kind of really hard to map anything. You're just going to really have to go off of the psychological numbers, all the round numbers, the 5,400, the 5,450 mark, the 5,500. So those are kind of marks you're going to have to look for. Now, we do have some earnings and some pretty big earnings this week that could cause us to start pulling back. Typically, I would like at least a pullback to roughly the 5,250. We'll have to see how that does look in this upcoming week. Did get a bit of some sell pressure initially once we hit the zone, but this candle looks like we're about ready to explode. So we'll see what happens in this opening week. We want to at least try to get over the 53.12 if we can this week. If not, I think we can come back down and revisit to the zone from the 52.40. I think that will pretty much be our range for the week. And there's no real big scheduled events, so I'm not expecting a big move for this week. As you can see here, this has been a nasty, choppy mess straight up. So this looks like they're really trying to keep this thing above water is what it actually looks like. I do have the 20 EMA, the 50 EMA, 200 EMA here marked on the daily, and then the weekly 20 weekly EMA here, 50 EMA. I don't use the hundreds typically because they're more of a speed bump. I typically only use these ones as they're a lot stronger pivots, especially if you're looking for first attempt bounces. If you play first attempt bounces, you could potentially put in the 100 EMA, but like I said, it's not a huge pivot. In my opinion, it rarely pivots off the 100. It more so aims for that 200, and then from that 200 is almost a guarantee pivot. If it breaks that, that means the market's just in a really bad shape typically. So again, we'll see what happens this week. But again, I figure we'd play between this range. If we don't start getting price discovery, again, you have to go off of psychological numbers. You have to let it build structure. So I wouldn't really, again, if you can hold above the 53.09 this week, you could potentially play that to the upside and just ride that out. Again, you would like some fuel to the fire. We have NVIDIA earnings that might allow us, if they do well, if their price action shows us that NVIDIA wants to go higher, if NVIDIA wants to go into price discovery, the market could very well follow behind that. So that would be something to keep on watch this week. If they do well before guidance is bad and they start pulling back, again, aiming for that 52.49 or 46 this week. It does look like a big dip, but considering the volatility and what's going on, again, there could be some black swan news, something I talked about on my other video. Just keep that in mind that could potentially dictate how this is going to play out. But as of right now, that's really kind of the range I'm looking in. But again, if it breaks to the upside this week, again, price discovery mode, and then just play off the psychological numbers from that point. So that is it for SPX. Let's take a look at Bitcoin. Bitcoin's got a nice little channel. We talked about this last week. It's not so much, the zone is really kind of just getting absolutely obliterated here. Majority of the time, you'll find a lot of times with zones, they do well. This is why when I do intraday trades, I drop down the 1 hour as well, because of the fact that sometimes they get in these smaller, these own different channels, and then eventually they break out and they start playing these larger channels again. So could be very much what we see here, but kind of really seeing if we can break above roughly that 69K mark. If we can, and we can at least hold above that and kind of get maybe pinched in between here before we break out. Would be good to see. Again, I'm not really thinking that Bitcoin is going to break away from the general market when or if the market in general starts to sell off or starts pricing in a recession. We don't know when that's going to be, so you can't hold your breath on that. But I think, Bitcoin's already had a great run up to the 74K mark. Potentially could even go higher, but again, you got to be careful. You can't essentially way too much to upside or the downside. We are kind of extended already. So chances it goes much higher from here is debatable. So you have to really be careful with where that could end up. But right now, you're really watching this channel. Let's see if it gets rejected here at the 70K mark. And it could potentially come back down to the 56K mark. If it does start getting lower, if it does break the 56K mark, you could potentially start seeing it running for that 45K mark. Something I said, if the market starts selling off, could definitely see a 45K mark. Again, if we do hit this area, I think it would be a very limited time, especially if we price in a market recession. It could rip right out of there from that point, maybe make a new high. I don't know how much higher. There's a lot of guesstimations on where we could land. Again, but you want to be taking profits on the way up and not holding all the way to the end and have high expectations and not reach it. If you can get, at least 2/3 of that move, that would be much better than attempting to just try to hold it and then not get anything and actually lose money on the trade. So that's what we got. Again, very choppy because we're waiting on bigger news. And again, there's not really a lot that goes on this week. So during the month of May. So, and I pointed this out not that long ago, or what was it, last week or the week before? I was talking about this breakout. It looks like we have started to break out of this week. Let's see if we can hold the 2200 mark or the 222 mark. If it does hold this, look for a retest, and we could, again, gold isn't like in price discovery mode, so psychological numbers, again, it's not going to move like the SPX. But every round number, if you go by tens, it looks like it could be getting rejected every 10 points or so. So just keep that in mind. It is quite choppy, so also keep that in mind. But we are breaking out, so we'll see if it starts getting a smoother price discovery towards upside for gold. Again, gold, silver are really breaking out right now. Gas, I should say oil it's kind of just holding steady right now. I don't really want to look at gas. I'll wait to do Tesla till later on. Let's take a look at SHOP. SHOP is one I've been really watching, and more so because of this. I'm going to go jump on the weekly. It has this support here, so I'm hoping that this does bounce here. I do have a position on this. Looking for this to try to come back up to potentially the 70 mark. We'll see how that does work. From that point, I'll probably more likely get out of this position, just offload and just wait for a bigger set pullback where this actually breaks here. Even if it doesn't break now, I'm expecting this to at least pop up to potentially the 70, then potentially roll over and attempt to try to re-break this, or I'll wait for that pivot. Maybe it decides to go sideways here and then breaks back down. But I want this broken back down underneath here before I start really buying the hold for a longer term play. But right now, I do like the current setup for right now and expecting some sort of pump at least back up to the 70. So watching SHOP this week, I think, is a good one. Palantir, I've been kind of the same situation here, although it's had these massive run-ups, and I don't like the fact that it had a pretty solid earnings and it sold off heavily. I don't like that. My confidence in this isn't as high anymore because of the fact that I think the market's getting ready to roll over, and this will be one of the first ones to start selling off because Wall Street really doesn't understand it just yet. So I do still think it's undervalued at 21, but I would really like it roughly more around the 15, but we'll have to see if that does happen. Again, just like SHOP, Then I'm waiting to see if it holds the 20 or actually breaks that. That might be a test this week to see if it does that. If it does break back down, again, I want to get another bigger position in Palantir moving forward. Take a look at NVIDIA. NVIDIA almost broke all-time highs again, at least attempted to do it this past week. But got rejected pretty hard. We'll see what this does coming into this week. If it continues to get rejected, again, you'll have earnings this week. So earnings will dictate whether this thing breaks out or not. So that's one thing to keep in mind. Again, the last earnings cycle did extremely well. Sold off into it, and then shot up from that point. And then again, since it's been just kind of holding here. So again, there's been some news about some Apple chips and stuff like that, some concerns about the future. Again, we'll have to watch the price on this. If we can break the 952 coming in this week, if it can, you get in price discovery mode, and this thing I think will easily rip to 1,000, potentially even 1,100. Strong possibility, especially if it breaks this. So definitely keep an alert roughly at the 962 here this week. If you get an opening day candle that opens above that, this thing could really start ripping, especially if it gets a strong earnings this week. So I do definitely want to keep this one on watch for this week and see what happens with that. Let's take a look at GME. This has been a crazy one. I don't like to essentially talk about meme stocks a lot on this channel because a lot of people are new, but you have to be very careful with this one. Again, we don't know what's going to happen, and it's a gamble. Do not bet life savings on this thing. Playing a little bit for profits is not that big of a deal, but if you're slamming your whole 401k in this thing, that is the wrong thing to do. Again, the stock, you have to think about the sentiment of the company. The company itself is complete garbage, right? There is no real future. And the only reason this thing has gotten such headline news is because of the short squeeze on it. So just be mindful of that. Over the past week, they diluted all the shares after this massive move. So you have to keep that in mind. But when we're looking at it technical wise, I like where it bounced. It's essentially held the $20 mark, which was a key mark for me over this past week. And if you really look at the weeklies, the weekly support is sitting here at roughly here. So this is the 20 weekly that I talked about. And typically what I've always talked about, if you follow me at all on the technicals, you'll get a massive breakout, which you've seen here. Obviously this wick very quickly, but then it's a retest to that 20. And that's exactly what this is. So we could this week potentially see some sort of bounce off of this. And it could be a massive bounce. I don't know, could or could not be. Again, that's financial advice. This is purely gambling, but trying to break it down technical wise, you should expect the bounce this week. How strong that bounce is going to be, we don't know. Again, you have to understand that because of this move, they have diluted shares, so it's going to be much harder to push this thing up. It's not saying it's not impossible, but it is definitely going to be harder, and you've already seen what they've done. The moves are occurring after hours. They're not occurring during the day, because during the day, essentially, the market essentially will suppress the stock during the day and hold it down, and then ultimately understand again the moves have been coming over on the overnight session, primarily in pre-market, and that's where we got this massive move that actually went up. That candle wick actually went to 80 pre-market, which is pretty crazy. You probably can't see it on here. Yeah, but it did hit up to 80 when you look at the 1 hour. So when you're looking at it this way, you're getting a nice kind of wedge here as well, which would be easy to see how this breaks out, because you are getting a really nice wedge in here coming into a descending wedge. You should at least get, and when I talk about a bounce, you could potentially even get, 3/4 retracement from this thing, which could potentially just bring you up to 50, which is possible. But again, I think you could get a massive rip out of this during this week. So again, technical wise, bringing that up again, not financial advice at all. I don't suggest that if you're new to the market at all to be playing this thing, because you can get trapped in this thing very easily. Is they take away the buy button. We saw this last Monday. I talked about this, so I highly suggest again you go and talk about check out my analysis video, and then come look at this. But technical wise, this thing looks good, like it could potentially at least try to go back to 50. Now, if it does, if there is a short squeeze, we don't know, obviously. That's why we get this 80 point. But like I talked about before, these overnight sessions are where the moves are coming. Like you get the selling during the day and it's kind of being held down, but as long as it holds the support, you're almost guaranteed that the next day you get that massive run up. And so this week, you need to be looking for this move. For us to pump out of here first. You want to break back over the 30 would be fantastic. If it can hold, if it breaks out and holds a zone for the day, you're almost guaranteed that overnight session, you're probably going to more than likely see another short squeeze like this happen. So again, things do not just go up. And when you're talking about meme stocks, you have to understand the massive amount of manipulation and the dark pools that are going on. And again, ultimately understand it doesn't matter if you put it in the limit order. If there is massive value, which there is on these particular stocks, you're not going to always get filled. It may hit at 80, but even if your order goes through, it may only fill you at 60. So these are things you have to be mindful of. So this is why you can't be playing with life savings, because of the fact that it's a little can go a long way, right? You're not trying to become a millionaire overnight. Now, we would all love that, but again, technical wise, you have to be very smart with this thing, or else you're going to get absolutely wrecked. And if you put your life savings in here and this, it hits 80 and you're about ready to pass out because you think you just hit the lottery, and then you find out this thing starts selling off. This all started selling off pre-market before we even opened, and opened up at 45. So you lost $40 at that point off that trade. And then it did hold a little bit, but then it just sank down, and then they started diluting shares the next day. And so that kind of just killed everything. But so again, just be very careful. That initial move, that's what I'm looking to capture. I am in this again. I did play this move. I got in. So I did get it in this again, but again, not expecting anything. I expect this thing to actually go to zero. So, but if it doesn't and actually starts to rip back up, I got that covered. I do want a little piece of the action if it does take off. So we'll see what happens with that. But again, I don't suggest that everybody jump into it. But again, we'll see there. So, and then what else am I looking at this week? Snow does have earnings this week as well. I really do like where it's actually currently sitting. It's almost in my buy zone. My buy zone is down here. I like the roughly it's around the 145 to 140. If we can anything under 140 is fantastic. But as you can see, it's been kind of holding just above that. So really anything below the 147 would be great. We'll see how well they do. Typically, they don't really do very good on earnings. So hoping they do bad again on earnings, and this may actually sink us into here. But the nice thing is with this stock is it's held essentially roughly this 120 mark, 125 mark really, really well. So kind of looking for it to come back down in the zone before buy. And even if I just play it up to roughly that 200 would be really nice. So watching this for a short-term intermediate play as well this week on earnings. Earnings are on Wednesday, so we'll see if it does sink into the zone at the 125 mark for potential buy here and short-term play. So watching that, we're looking at BA here. BA, again, every time I bring up this stock, I don't know why it's as high as it is, but it is. It looks like it's sinking back into this range, and we've talked about this range because it's been stuck in this 180 to the 200 mark for a very long time. It looks like it's finally starting to break back into this thing. You could even theoretically play this small zone all the time. It has been playing this range for a very long time. hold the 180 and then play it up to essentially the 200. Again, my only concern with this stock is, again, the planes are falling apart, and then you got tons of whistleblowers. All it could take is one really bad piece of news, and this thing get absolutely obliterated. So that's my only concern about any kind of long-term hold for this thing. But again, do your own due diligence and see how you want to play this. But as far as technical wise, looking for it to potentially run up to the 200 this week, and then get rejected off of that, maybe dip down a little ways, and then potentially try to break it out again, or maybe it just again continues to chop in this range. So watching that for BA, and then for JPM, we're on price discovery mode for JPM. Looking for hopefully at least a retest. It hasn't really retested. It just popped up. Maybe it starts retesting this week. But if it holds at 200, could be a strong buy this week to watch, see if it does hold, and then continue in its price discovery mode. The whole market in general is almost in price discovery mode until we get some bad news. And like I stated, until that bad news, the things that I talk about in the analysis about everything that's going on with delinquencies and stuff, once that actually hits that utopic view, this thing will just come down like a ton of bricks. Like I've said, this parabolic move is completely just ridiculous. Like, you should have nice structured build up and push, but as of right now, it's just straight up, especially JPM with their acquisition of some of the assets from First Republic, which they should have never gotten. But considering it was offloaded to FDIC is actually still holding, I think, 95% of First Republic, as nobody else wants what's left of it. And so, but the 5% that they did get rid of, it was offloaded to JPM. So we'll see how this works moving forward. But that's that. Now let's get into Tesla. So if you made it this far, I do appreciate you. I will kind of get into this a little bit better, and we can start talking about this. For this particular one, I'm going to go ahead and clear the drawing set. As you can see, it is in a very nice wedge here. So looking for this particular week, let's kind of show you what I look at now. Typically, what I do for a lot of these, because I play them for longer swings, I typically will do this off the daily, so do keep that in mind. And then from that point, if I do an intraday trades, I drop it down to the hourly to get more refined and to capture moves on the hourly. I try to go lower than the hourly, but there's a lot of the algos play roughly around that minute to 3 minutes. So they're essentially shaving pennies off of everything. So that can be really hard to play because of that fact. Now, there are some people out there that can do it. I'm not a fan of it just because there's too much fakes you out a lot, in my opinion. If I focused on it, I could probably do it, but eventually I don't have the patience for that. I'd rather just play some of these larger time frames, and it pays well. So there's no point in me learning the other technique and going crazy. So to get started, I think this is probably the first good one to highlight here. Now, I do like to include the price just to see it in general, as opposed to trying to figure out what it is. You can set up the way you obviously want to make your chart look, but this would be a very basic level. As you can see, it's held support here. Well, it's actually gapped here, and then it's been rejected once it's actually broken. So you can see that it actually retested this, which was old support, which is now resistance, and essentially sold off here. So now Tesla is pretty choppy, so it's a little bit harder to kind of gauge this. But what you're looking for is a point in which you're kind of getting a lot of consolidation, a lot of big bounces off of. And when you do it at the higher time frames, you can see where it becomes a little bit more obvious of where that zone is. So even with Tesla being as choppy as it is, you can kind of tell. So I draw the lines first, obviously, and then you can kind of box these out. Sometimes I box them out, but I've done this for so long that sometimes I don't, because I don't like continuing to have to keep moving the boxes over. Can extend them to the right too, but there's other better charting platforms. I just use TOS because I've just used it forever at this point. So and you get free live data too, so that helps. But and so this is the other one here down here. You can see some support here. Not all the time it's not going to be 100%. You have to also understand a lot of the institutions as well. So a lot of institutions know that you have a zone here, and so you'll get a lot of these major breaks like this to try to get liquidity for them to buy it up and then break back up. So you'll see this often, especially if you're getting a lot of consolidation. There's a massive move down. That's your liquidity spike typically that will essentially cause this massive spike up. So this is what gets a lot of people. And when I do a lot of these, that's why a lot of times I do a lot of swing trading. I don't try to play, I play the zones for entry, but ultimately understand I'm aware that it can come very well down here. And I'm aware if you get a good stock, like a solid, this is why I trade a lot of the same stocks that I believe like in the company and what it's doing over the next 5 to 10 years. I like the CEO and stuff like that. And I'm well aware that it can come back quick. And something like Tesla, again, is a kind of a cult following. So I know that Elon Musk will eventually figure out a way, right, to get the company to pivot. So I'm not concerned about this coming down, right? I know that's a liquidation spike. You see this all the time. The longer you do this, the more patient you are with these liquidation spikes that come down. Again, you always have to be very aware of that stock as well. And if it does break it, what is the news on it? Is it something that's just a temporary thing that's not really that big of a deal? Then you can determine if you really want to be in that, right? You can put your stop underneath here. No, you can get stopped out if you don't believe in that. But again, I have a weird trading style, and it's always really worked for me. These are longer swings, right? So I'm prepared to hold this. A lot of these are, especially with Tesla, I'm prepared to hold this for like 5 to 10 years. And that was more of a kind of investment for the next 5 to 10 years is what I'm looking at, because I really like the technology stack and what they're doing. They're going to have two, in my opinion, chat GPT moments, one with FSD and the other with humanoids. And when that happens, I believe in the next 2 years, I think this thing is going to absolutely skyrocket. And a lot of that news comes way before it actually is. If you look at like AI in itself and chat GPT moment, things ripped up for 6 months before there was actually really any solid like use cases outside of just like the chat and Palantir. There isn't really a lot of solid use cases. So a lot of that started dying off, but it came way ahead of time. And I'm expecting that with FSD and Elon really pushing China right now. I think it's really going to open a lot of people's eyes on what it is capable of. And I don't think it's priced correctly just for the FSD part of it. And then it's not even including the humanoids aspect of it. And the fact that I think, again, Tesla has a lot of advantages because they can build out, they have the machines to have a production line for building humanoids and have the energy capacity to be able to do that. And then the whole AI aspect of it, they can create that very quickly. Again, they have some of the best engineers in the world, right? And understand that Elon Musk is very smart himself and where that could potentially be going. So again, I do believe in the stock a lot. So in my opinion, I'll buy here at the 165, knowing that it could dip down, and I'll just buy more. All right. And so just be mindful of that. Again, I'm not saying you do this on every stock. If there are some strong stocks that have a strong sentiment right now, I believe that can play in your favor. And then ultimately understand this liquidation spike could potentially happen. If you believe in the stock, right, you can buy here at a zone, or if this is just an investment, right, buy at these levels, and then when it comes down, buy again. Be aware that this could be a liquidation spike, and it's going to pop right back up, and that's exactly what Tesla did. And on the higher time frame, like I said, we have that huge wedge that we're trying to break out of. So typically, not trying to do a whole rant here either, but so those are solid zones in my opinion. I wouldn't, the thing is with the zones, you don't want to get too crazy, right? Like you can zone this whole thing, but what's the point of, in my opinion, because you do these, if you should be doing these on a regular basis to kind of identify your zones anyway, to be mapping all this stuff, we don't know when Tesla's going to get back to all-time highs. So for me, typically, even this zone might be a little bit too much, but I only try to do like 2 zones because typically a stock will only move about 2 zones during a week or two. So I just kind of try to zone 2 zones and then kind of let it go from there. Like this could potentially be, I probably need a larger time frame because that's not really a lot. It's a little bit of a zone here. You can see again where it's held up on the monthly here. It did break and retest and wick right out of here. So this has been a pretty strong zone roughly here at the 118 mark. So again, that's my next zone down. So again, you want to again just keep, these are primarily where Tesla's probably going to operate over the next week. But if it does manage to break out for the week, this is why you just kind of zone the next one. Just so, okay, well, we're going to this target then. If it does break here, and that's what I'm aiming for this week. That's not saying it will make there over some time. It may make it there. Again, realize what time frame you're on, right? We're on the monthly here, so it may take a month for it to get back up to here, but that's where the next target is. And so those are the kinds of things you need to pay attention to. And so again, if we can't hold the 161, it breaks down, we're headed towards the 122, and that's the next zone. So, and again, like I said, if you're going to play the liquidation spike, right now it doesn't really look like much. It just looks like a bunch of chop. Just making it's a higher low at this point from this higher time frame. As long as it doesn't break, back down below here the 118 mark or close below the 118 mark, this is a higher low right now, which could be a good sentiment that Tesla is actually starting to come back. It could potentially, again, we do have a larger wedge, like I was pointing out. You can see it better here on the monthly. But yeah, so we'll see how this plays out. But that's essentially how you do your zones. And see, we got a larger wedge here, critting on this time frame. So watching that, and then just to kind of drop down to the 1 hour. Like I said, those are the higher time frames will let you kind of know, like if you're going to do like longer swings, I suggest doing the higher time frame. And then when I do intraday trades, just be mindful. This is typically what I will do is I will come in here and look at these so that you can see a lot of these other zones. Like here could be a potential zone for that day. Right, that could be another smaller zone. So you could be playing this throughout the day. So just keep that in mind. So when I do 1 hour zones are more accurate, especially for the intraday stuff. And so, but if I am just swinging stuff, a lot of this is just noise. And so I just pay attention to these bigger zones here. Maybe I'll drop it down into the 1 hour to try to pick it up, is what I typically do. So I'll drop it down to the hourly if I try to get an entry point on there for that longer swing. Again, and then again, ultimately, no, you could get a liquidation spike like we saw back down here. So definitely a liquidation spike. Actually pull this out of that V, but it was saved and pulled back in. So so we'll see what happens. But yeah, that's pretty much how you zone. I know I have a video on that. Try to get some more tips and tricks on how to do these zoning, and ultimately show that's how it is. And again, I've always used the 1 hour. I don't drop down to the lower time frames. Again, I think it's a lot of noise. The lower time frame you get, you start seeing a lot more noise, and it's harder to trade. So again, you have to use what works for you. And for anybody in any kind of trading, intraday trading, to say that you have to do it this way, you do have to have, I'll say one thing about that, you do have to have a set of rules that work for you. Those set of rules work for you, then you'll do really well, right? But you have to know, it's good to learn from a bunch of other different traders and kind of essentially create this style that you want to use. Like I primarily will only intraday short to the short side, and I'll play these intraday zones at the 1 hour and only short. And especially I like when you get a lot of when you get a massive wick, right? So say the day starts here and it just massively wicks up, right? There is a zone here. You could zone this out. Right, you had some candles that were in here that rejected. So the first major pop into here, you could have shorted that and got a nice short out of it. So those are the kinds of things I look at for intraday plays. And again, on the higher time frames, if you're not playing intraday and you just want to play swing trades, then pop it onto the daily. Get these zones, play the zones. If you're okay with liquidation, if you're not okay with that risk, then you can essentially put your stop below that, and then it'll tag you out when it drops, and then just wait for it to get back in that zone and then get back in just for confirmation. So, but again, if you're playing good high quality stocks, it shouldn't be that big of a problem. But if you're playing, like Neo or something like that that's out there. Some of these, a lot of these the EV sector in general is just getting slammed, right? Like, why would you get some of these like B brand EV companies, right, that aren't going to go anywhere, right? So get well-known brands, and you can play these zones like I've been discussing. So there is a craziness to the madness that I do present. So but with that being said, if you do like this was extremely helpful. Just drop a like, put a comment down below, and let me know if the tips have helped you. Again, this takes time. This isn't going to be perfect, right? You have to figure out what trading works for you for intraday. And again, a lot of intraday trading is patience. Like, you can't jump in every little thing every single day. You will get wrecked doing that every day, trying to force a trade, especially like now. Know your cycles. That's why I have the whole analysis part of this channel, is because you need to know what's going on in the market before you go jumping into a trade. If you got a bunch of scheduled events, the market may just trade sideways all day. Why are you forcing a trade? And why don't you wait till that event occurs? See if you can take advantage of that event using these zones, these intraday zones, and then take it from there, right? So it's a lot about a lot of time and a lot of patience, and you can make it work. Otherwise, you can just use a higher time frames and just do swings. Swings work fantastically well. Some of the best traders I know that's been most profitable have done swings, and just mark the dailies and just use these daily zones, and then maybe practice on the 1 hour just to try to refine your entry, right? And so there are multiple ways to do it. I trade in multiple different ways. I trade intraday. I do a lot of swings. I trade options. I trade futures. I've done it all pretty much. So, and again, just be very mindful of that. Be very careful. Risk management. And again, know what's going on in the market before you just jump in. Have a plan before you just jump in. It seems like a lot now. Take it one step at a time. Try to master one thing before you go on to the next thing, and then eventually over time you'll have it all that knowledge built up. So with everything being said, I appreciate you. Go ahead and drop a like, and I'll see you on the next one.